Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. It is September 17th, 2018, and tonight I'm going to take a look at the S&P 500, the ETF being SPY. And the reason I'm looking at tonight's action here is just because of the talk that's going to be out there with the tariffs. There's not really too much that's really showing up in the Deep Dive right now. As you can see in the S&P, that the trends are all pointing to the upside. These are slow-moving type indicators, hence the reason they're trend-oriented. The technical indicator hasn't switched as of yet, but I'm going to be addressing this from the perspective of when we look at the market and we look at the just the chart itself. I'm foreshadowing that this is going to start to flip around here fairly soon. So I just want you to be aware of it. Nothing is showing up here in any of the overbought, oversold type indicators. The only thing that's really popping up here is not even in the S&P 500, but it is in the Russell, where we had a doubt high, profit-taking doubt high on weekly bars. Today is Monday, and so this is now forming, and so it's early in the phase. But there's some indications that the market might be reversing. Maybe not so much in the S&P with this indicator, but I think in the equity sector as a whole that we're going to start to see this. So what I'm going to do is spend a little bit of time here and kind of show you what's taking place here with the S&P to give you some perspective. Now, our systems are currently long. We had one that went long on this little dip right here, and then we had that one that went long back on this 8.6 right here with this breakout to the upside. And so we've had a nice little bounce to the market. We've had a retracement. We've had another surge here. And we've had this retracement off of this resistance level that we have right through here. So this is going to be a key right here, just the fact that the market's gone up and it's retraced a little bit. So we would expect that the market would reverse a little bit, not having gone through that particular level. So you can look and see that there's multiple levels where the market could really be coming down to. So I think that there's individual support levels to the market, and we'll address these, but nothing that is going to be, I think, catastrophic, but I think it could be a stair-step effect to the downside. And we'll have to see how the systems actually work out here. Just on a weekly bar basis, you can see this major resistance having had the peak to the market in the early part of the year. We're still above it, and we're kind of meandering a little bit. So if it starts to sell off here with this nice little 45-degree angle surge to the market, it is having difficulty substantially breaking above this resistance level, and so it's sort of toying with a little bit that there's a possibility that if we start to sell off here, especially with talk of tariffs and whatnot, that there could be a little bit of more of a bearish bias to the market, and should really start to watch our long positions very, very carefully. So let me flip back to the website here and just kind of show what's going on. I mentioned that we had one system that went long on 8.6, another one that went long on 9.7. So we do have profits out there, even with today's action, with the little sell-off that we actually had. It's not a huge profit per contract, but it is trading the S&P 5, the E-mini in this case, and it's only, you're not really making that much money per point value, but we do have substantial profits, from that perspective nonetheless, and they are both trend based. So these are going to be potentially slow to reverse. That's why I'm kind of showing you what's taking place here. When it comes to some targets, you can see that we have this stair-step effect. This is Friday's close, not Monday's close. This is Friday's close, and we broke below the 29.09 level, basically the 29.10 level, and we're in between these stages right now with the closing value, and so what we'd be looking at is 28.98 as the next level, and you can see the stair-step effect as far as these multiple levels that we could come to. There's not substantial support to the market, but they are nonetheless modest support levels. Not until we get down to this level that we're above this 104 level. In fact, I'm going to probably do a workshop here in the next couple of weeks or so that will talk about this information in a little more detail. But suffice to say right now that if we were to come down to this level, we may base a little bit and then sell off again and sell off again, and we would find these levels of support, I think, to be quite nice. So I'm not expecting a huge drop to the market, but I am expecting maybe a more of a stair-step effect. And with our systems being long, just watch these systems. They could be slow because they're more trend-based to be able to react to the market. So hopefully, with any luck, some of the other pattern-based systems on the short side will start to trigger should the market really start to sell off here and put ourselves more in a hedge position. If I flip back to the market itself on the daily bar basis, you can see the surge here, another surge there, but we're not seeing any strong follow-through. It's not really a bearish divergence, but we're not seeing any follow through here with the high here and a substantially lower high right through there. So I would suspect that because of this, that we're going to come down a little bit further, and we'll find ourselves in a position where the market could sell off a little bit, and the long positions we have, and this is why I'm talking about it, need to be watched, because I think that they'll flip over here if the market sells off even further. If for some reason I'm wrong here and the market starts to rally and does a complete about face tomorrow, the level to the upside that you want to watch is 29.12 on the S&P 500. Call it 29.21 and a half, I should say, not 29.12. That's the key level you want to look at. The market, for as bullish as it is, could do an about face tomorrow, and we could still find some resistance up through there, and then all would be well with our long positions. But my inclination is that even though there's not a lot showing up on the deep dive, it's long in the tooth. We've had that resistance for a little while. The market has had some difficulty breaking through this bigger upside level that we have here, that we could find ourselves retracing to some of those stair-step support levels to the market. And with that, you just want to be very careful with your long positions right now, because any news that's going to be coming out there could be abrupt, and with that stair-step effect, could still be fairly dramatic, with some nice little sell-offs. But I think that it will find support, and then if it does sell off again, it'll find some more support down the way. But where we stand right now, we still have a little more downside potential. So watch the long positions on the systems. And if tomorrow does not do some type of reversal back to the upside, look for the market to default to this level right through here, which is the 28.67 and a half level as one key level you could be looking at, as well as some of those other support levels I was talking about in that stair step. So watch over things, and we'll see how things kind of play out here. Coming into September and going into October, usually there's a crescendo effect to the market, and then in mid-October, from a seasonal perspective, that's where we start to see some real strength to the market. So any type of minor little sell-off, tradable sell-off that we might see here should not be anything out of the norm, and it's something that we can take advantage of when it comes to building out some more long positions down the road. So watch your equity markets very carefully, watch the systems, and we'll take a look at another market tomorrow. Thanks very much. Bye-bye.